Hello, I am Edmond Jamna, and on behalf of DW Consult, I want to introduce to you Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, and shaky base in accounting to an expert position and to a place of confidence. It is also a platform to stay abreast in all matters of accounting. Tutorials on the Go is also designed to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as any tertiary accounting discipline. All that is required of you is to subscribe to our channel on YouTube at DW Consult and click on the notification bell to be part of it. Also, like and share the videos by way of inviting others to come aboard. Tutorials on the Go, bringing accounting to heart. Now, today's episode's lecture. Now, in this part of the lecture, we are going to talk about the cash sale of non-current assets, then part exchange of what? Non-current assets. Let's talk about the sale of non-current assets. So, an asset is practically unusual to be kept for its exact estimated useful life. So, it might be kept for a longer period or for a shorter period, all depending on the decisions by the management or its activities. It is also virtually impossible for what you receive after selling of the asset, that's the sales proceed, to be equal to the original cost of the asset, which is shown in the financial statement. So, on sale, the asset must be removed, that is derecognized from the financial statement, and any difference calculated between the proceeds and the value in the financial statement, that is the net book value or the current value. So, the difference will be termed as the profit or loss on sale, and it's recorded in the income statement. Okay, so if the sales proceed is greater than the net book value, then there will be a profit on sale, which will be an income and credited to the income statement. However, if the net book value is rather greater than the sales proceed, or the sales proceed is less than the net book value, it will result in a loss of sale, which will be debited as an expense to the income statement. Let's look at the accounting treatment for the sale of a non-current asset, where we sell the asset and get cash back. The first is that remove the non-current asset from the account. We do that by opening a disposal account and debit it with the original cost of the asset. Then we come to the non-current asset in the balance sheet and credit it with the original costs. The second step is that we have to remove the accumulated depreciation from the financial statement. We do that by debiting the accumulated depreciation account up to that period. Then we credit the disposal account already open with the same amount. We come to the third step, which is the recording of the cash proceeds. We debit cash account, then we credit disposal account. So the balance on the disposal account at this point will determine whether there's a profit or a loss, which is to be transferred to the income statement. Let's test our understanding to make the things clearer. Now, Kojo runs a landscape gardening business. On 1st February 2019, he purchased a lawnmower costing $12,000. He depreciates it at 10% straight line on a monthly basis. Okay, so monthly basis means that it is pro rata. So a few years later, he decides to replace it with one which has an enclosed cabin for when it rains. He sells the lawnmower off to an old friend, AC, for $11,000 on 30th June 2020. Okay, so let's calculate the profit or loss on disposal. So we first have to calculate the depreciation charge for 2019. It will be the depreciation percentage, which is the 10%, times the original cost of $12,000. So it's 12,000 times 10% times 11 months. It was bought on 1st February, so February to December is 11 months, divided by 12 months, the full year, which will give us $1,100 for 2019. So we open the lawnmower, which is the asset account, then we debit it with cash, $12,000. Okay. So if we have to open a cash account, we would have credited it, but it's of no essence here, so we won't open it. We'll come and open a depreciation expense account and debit it in the name of accumulated depreciation for the $1,100. Open an accumulated depreciation account and credit it in the name of depreciation for what? The $1,100. So we close off the account, as we believe you know already. So we'll end up with a balance on the lawnmower account of $12,000 on the debit. Statement of financial position on the expense account, $1,100. A balance on the accumulated depreciation on the credit of $1,100. 2020, the same formula stands. So the depreciation charge will be the depreciation percentage times the original cost. So it's 12,000 times 10%. Now the asset spent 6 months in 2020. So the depreciation here will be 6/12, right? We spoke about proration. A business deciding whether to charge per period that the asset stays in a business or charge full year. Now, upon disposal, a business might also decide to charge depreciation for the period it stayed in the business till it was sold off, or decide to charge no depreciation at all. So here they are charging for the time is spent in the business. So it will be 6/12, which will give us $600. Okay. Again, we open a lawnmower account, which is an asset. There was a balance of $12,000 coming from 2019. Open the depreciation expense account. Then we debit it in the name of accumulated depreciation, $600. Open the accumulated depreciation account. There was a balance of $1,100 coming in from 2019. So we credit it. When we credit it of $1,100, then we bring the depreciation to the credit as well. There has been a disposal. He sold the asset off to AC for $11,000. So what is the first step? We have to come and take off the asset from the account. What do? We come to the lawnmower account, credit it with the original cost, which is $12,000. Open the disposal account and debit it in the name of lawnmower for $12,000. The second step is to take the total accumulated depreciation off. So we come to the accumulated depreciation. The balance will be what? $1,700. So we debit the accumulated depreciation for $1,700, taking it off totally. Then come to the disposal account and credit it in the name of accumulated depreciation for what? $1,700. Now the asset was sold for $11,000 receiving cash. So we have to come to the cash account, debit it in the name of disposal for $11,000. Then credit the disposal account for $11,000. Okay. So after we balance off all the accounts, you see that the lawnmower will be zero. The depreciation account will have a balance of $600, which will go into the income statement. Then accumulated depreciation will also have zero. The cash account will have a balance of $11,000. Then the disposal account, when we close it, realize that there will be a balance on the debit of $700. Okay. So once the balance is on the debit, it means that we have to go and credit the statement of profit or loss for $700. Once there's a credit on profit or loss, it is what? An income. Once it's an income, it will be termed profit on disposal. Okay. Now, let's talk about the second part of selling an asset. Here, we don't dispose of the asset for cash. We are going to dispose it of in exchange for another asset and possibly top it up. So here, when we do that, we have to remove the asset from the financial statement. We have to also remove the accumulated depreciation from the financial statement. Then the third step, we will now have to record the exchange. So we have to debit non-current asset because a new asset is coming in. Then we'll have to credit the disposal account. Balance on the disposal account here will be either the profit or the loss. Then we move on to a fourth step where we record the cash balance that we are going to pay, assuming we are topping up on the asset that we are selling off to get a new one. So we debit the non-current asset because the asset was coming in. Then we credit the cash account because the cash is going out. Okay. So Kojo again runs a landscape gardening business. On 1st February 2019, he purchased lawnmower costing $12,000. He depreciated at 10% straight line on monthly basis against pro rata. A few years later, he decides to replace it with one which has an enclosed cabin for when it rains. Kojo has been offered a part exchange of $10,000 for the lawnmower for the enclosed cabin and top up with $5,000 on 30th June. It means that a first lawnmower has been valued for $10,000 and he's supposed to top up with an extra $5,000 to get the lawnmower with an enclosed cabin. Okay, so let's look at its treatment. So in 2019, there will be a depreciation for the old asset, which is the $12,000 times the 10% multiplied by 11/12 because it spent 11 months in a year. So it's going to give us $1,100. So we open a lawnmower account, we debit it with $12,000, then open depreciation expense account and accumulated depreciation. We will debit the expense account in the name of accumulated depreciation for $1,100 and credit the accumulated depreciation account in the name of depreciation for $1,100. So we close off the account, realize that the asset will have a $12,000 debit balance. Depreciation account will have a profit or loss of $1,100 to the credit. The accumulated depreciation will have a credit balance of $1,100. Now when we come to 2020, we'll have to calculate a depreciation charge for the 6 months it stayed in the business before it was sold. So the 6 months will give us $600 following the formula. So we open a non-current asset account. Now we are not using a lawnmower account because the lawnmower is going to go out and new assets will be coming in. So we debit it with a balance that was coming from 2019 with the $12,000. Open a depreciation account, leave it for now. Open the accumulated depreciation account and bring the balance of $1,100 from 2019. Then we come and debit expense account with the name of accumulated depreciation. Credit the accumulated depreciation account of $600. So now the accumulated depreciation will have a balance of what? $1,700, $1,100 for 2019 and $600 for 2020. Okay, now the asset was sold off on 30th June 2020, and the sale was not for money. It was in exchange for another lawnmower with a closed cabin. So the one that was going out was valued for $10,000. It's going to exchange it and add $5,000 to it to get a new one. So what we'll do is that we'll come to the asset account and take that $12,000 out. So we come and credit it in the name of disposal, $12,000. Come to the disposal account and debit it in the name of lawnmower for $12,000. Okay. So we go to the accumulated depreciation account, take that one off as well, if you remember the steps. So we'll come and debit it in the name of disposal for the $1,700. We come to the disposal account, credit it in the name of accumulated depreciation for $1,700. Okay. Then we go and record the exchange. So we come to the non-current assets, debit it in the name of disposal for $10,000. Okay. Then come to the disposal account and credit it in the name of what? Non-current asset for what? For $10,000. Okay, because money was not paid for it. It's because of the disposal. Now, the $5,000 that was paid for cash, it has to be what? Recorded. So we come to the non-current asset. It's because of the non-current asset that the $5,000 is being paid. We debit the non-current asset for $5,000. We come to the cash account and credit it for what? For $5,000. When we balance off the account, you realize that there will be a balance of $15,000, which is the cost of the new asset coming in. Okay, so the $15,000 is what we're going to depreciate for the rest of the 6 months in 2020 if we were supposed to do that. We come to the cash account, you balance it off, realize that we'll have a balance of $5,000. Then disposal account, when we balance and close it off, you see that now the balance will be on the credit. In the earlier example, it was on the debit. So once the balance is on the credit, we would have to go to the income statement and debit it. Any debit in the statement of profit or loss or the income statement is an expense. So once it's been in an expense, it will be what? A loss on disposal. So this is where we're going to bring our lecture to an end. If you have any question that needs to be addressed, kindly drop them in the comment section below. We'll also entreat you to subscribe by clicking on the subscribe button and click on the notification bell as well. So we'll come again next time. We'll sign off. Stay blessed. Poker.